reducing cost trading options in particular here today. I want to go through what the cost is to trade options on stocks and ETFs and do a little bit of the back of the envelope math that I've always functioned by when trading stock options, and then talk a little bit about how much futures options cost and how you can maybe just like free up some buying power by going from something like, a SPY ETF, the S&P 500 ETF, to the MES futures here, because this is the same exact underlying market, right, Katie? It's just a little bit different. One's an ETF, one's a futures, and one is priced a little bit differently. But let's face it, these two markets aren't that different.
Yeah, I agree. And I think this is a great conversation to have because, I mean, you and I have been on the road, and I'm sure we've both done talks where we've talked about like the benefits of incorporating futures options, or even just like options in general. But the big question we always get is like, okay, how do I like wrap my brain around like that I'm not trading an individual name or something like SPY, and that I can still have similar risk in something that from the outside feels like it's so much more leveraged, and therefore it's more like doom and gloom, and I'm controlling all of this notional value. So I think this is a really great time to have like a quick little chat about how the transition is not, or the leap, to quote your old show with Jamal, how it's not as big of a leap as it probably, was even 5 or 10 years ago. It's so much smaller now.
Especially for people who are even semi-active. Like if you're so passive that you just like once every couple of years want to go in and buy some S&P 500 and not do anything with options or anything else, hedging, risk management, anything, then just go to the SPY, because you at that point you probably don't care about cost because you're so passive. Which isn't, it makes it sound so like derogatory. Like you're so passive that like it doesn't. Yeah. But even if you're like semi-active, like you're checking in on things every month, or a lot of the people who watch our program, checking in almost daily, probably a couple times a day, it is worthwhile, that we'll see it here in a second, to go from the SPY ETF to the MES futures. Like look at here, the high for $480 in SPY, $4,800 in MES. Like you can see these are actually two lines. There's a white line behind this, which is SPY. It's the same exact market. And actually, the big thing to Katie's point is, I don't want the leverage on these big futures. With the micros and the smalls, this micro is actually smaller than SPY because you've got a $5 multiplier here on this futures contract. And you've got 100 shares of this SPY. So if the market is, $420 in SPY or 4,200 in MES, that equates to, make sure I get this right, $42,000 worth of risk per SPY options, because it's 100 shares times 420 versus, half of that. Yeah, I think I'm doing that right. Half of that in MES, because it's 4,200 times $5. And so it's essentially 50 shares of SPY. So it's actually a smaller product than SPY. Now let's get into a little bit of the costs here, because trading options does cut your costs down in terms of, relative to trading the stock itself. When you trade stock, you're usually margined at 50 to 100%. For stock options, the S&P 500 ETF, TLT, GLD, all these markets you'll notice have a buying power that's about 10 to 20% of the totality of that product. And that's the back of the envelope math that I've always lived by. Katie, maybe you have similar calculations, that whenever I sell a put or sell a call naked in an ETF or stock market, I'm usually expecting a buying power of about 10 to 20% of that, the price of that market.
Yeah, I agree. And I think, one thing that's not even listed on here that is a benefit is, you're able to control your break even and your probability of success a little bit more as well. Like if you're buying the shares, it's a 50-50 shot. It's going up and you're making money, or it's going down and you're not. But here, by, utilizing something like a short put option, you do have the ability to enhance your downside a little bit. So even if you're wrong to an extent, you might still actually be profitable.
Exactly right. So a lot of reasons to jump from stock to stock options, but then you look at the futures options, and I would ask that people kind of stay on this top line because the SPY MES is a really good example. You're paying, $3,500 for a $35,000 product. When I was looking at the 350 strike, you look at the 3,500 strike in MES, and you see, like I said, it's half the risk of SPY, and I'm for half the size, Katie. I should be putting up half the buying power. I'm putting up a sixth of the buying power. When you look at that, $3,500 for SPY, that's twice as large. $500 for MES, that's half as big as that SPY. So a lot of savings. And the same thing goes for, especially look at small US dollar here, the buying power for a lot of the options in SFX, $100 for UUP, a product that's a fifth the size of SFX. They're demanding 5 times as much buying power. Those numbers don't jibe. So you really are reducing cost by going from stock options to futures options in a lot of these markets. And I know a lot of people have really liked not only the SFX, but also, Katie, the SPRE, because you're used to trading gold through the GLD. That's what I'm used to. And you sell a strangle or anything in there, or just a put or just a call. And it's pretty costly. And to reduce those costs with futures that, thanks to micros and smalls, are smaller in terms of risk is a really big move. I mean, you free up a lot of buying power by cutting your buying power per, gold options or S&P options. We saw an average there, cutting those costs by about a fifth to a tenth.
Yeah, I just pulled up like a 20 or 30 delta strangle in SPRE. And it is wild to be able to say, oh, like, okay, I've got like $2, $3 to the downside and $2 or $3 to the upside. And it's only costing me like $450 in buying power compared to something like utilizing GLD. It's just like you said, like the fact that there are all these new smaller futures products available to us, it's really powerful for people that are looking to dip their toes in and start to utilize these products a little bit more when, as you can see here, the price movement doesn't really break down all that frequently.
Exactly right, Katie. Thanks so much for jumping on here today, reducing costs with futures options compared to stock options. Everybody, thanks for hanging out. We'll have some great content tomorrow for you on small stakes, building up to the non-farm on Friday. Hopefully you're getting some trading action in and sticking around for Splash into Futures coming up next. Have a great night, everybody. Peace.
Peace.